Hi guys. Can you all hear me? Can all of you hear me?
Yes, sir.
Okay, thanks. Thank you. Right. So this is the financial management module of DABF. Right. So I hope I'm in the right class, and I hope all of you are also in the right class. Right. So I don't know whether any of you have attempted financial management previously, but this is supposed to be a tough subject, right? But tough in the sense tough to get through. Right? At least that is the perception. But now, having said that, well, basically, I have good news and bad news for you all. Right? Now, the good news is, I'll start with the bad news. Right? I'll give the bad news first. The bad news is about the pass rate for this subject is around 20 to 25, maximum 30%. Right? So, which means it's very low. Right? But the good news is, in spite of the pass rate, if you go through the syllabus, you will feel that it is a very, very simple subject. Right? Because it's, if you go through the questions, you will notice that it's always the basics that are being tested, right? Nothing beyond the basics. So you only need to know the basics. Now, why do 70% of the candidates fail? The reason is they don't prepare well. Right? Exam preparation. 50% of your success depends on how well you prepare for the exam. Okay, so that's the main reason for people to fail. And the balance 50% is because factors like they don't manage their time well, they spend too much time on too little things, and on top of everything else, they forget the basics. They forget the basics. Now, that is the fundamental error. You should never forget the basics. You stick to the basics, you understand the basics. That is all. You don't have to put an extra effort to study the subject. Very, very simple. Okay. Well, I can almost give you all a guarantee that if you attend classes regularly and if you pay close attention and if you focus on the exam, you do some past papers, guaranteed. I repeat, guaranteed you will pass. So it's a very, very difficult subject to fail. If you want to fail, you have to try very hard. Very hard. Very, very difficult to fail. Yeah. So I'm here to help you all. I will try my level best. And if you have any questions, you can always ask. You can maybe unmute yourselves and ask, or you can even type it on chat. Right now, 2019, right? We had, in spite of East attacks, we had 2 exams. If I'm not mistaken, we had May 2019 May as well as 2019 December November, right? And then came COVID. Right? So from 2020 to date, there was only one exam during 2020. Yeah? One exam, only one exam. There were no 2 sessions, just one. And well, when the country opened up, we managed to scrape through. Right. So this has become the new norm. Whether we like it or not, COVID seems to be here to stay. And until there is a cure, well, there is a vaccine, but so far there is no real cure, right? It's not like you get the polio vaccine and then you become immune. So looks like we will have to live with it. So this has become the new norm, and we unfortunately are unable to meet physically, right? So I would personally have preferred to meet each and every one of you physically rather than online, so that I have a feedback. I see your facial expressions. I know whether you all understood, whether you all did not understand, whether you all agreed or disagreed. Now I have nothing. And I just look into a camera and I just keep going at it. No feedback whatsoever. Okay, so this is the unfortunate thing of COVID. Then the positives are you can save on travel time. Now that is also there. So time you can save, but again, you cannot socialize, right? You cannot admire the beauty of your class. You can't do anything like that, right? You're stuck at home listening to a boring lecture on financial management just after you had lunch. Normally, you would have been in bed at this time on a weekend, on a Sunday. Okay, so it all means that you are sacrificing a great deal of your time and money. Yeah, so in other words, with that kind of sacrifice, you have to make sure that you get through this exam. Right? Just make sure you get through this exam. It's I guarantee you, it's very, very easy. If you understand the basics, it's guaranteed you will get through. Right? So all you have to do is try and understand the basics, go through some financial news, be aware of what is going on around you. Yeah. Right. Now, COVID-19 has posed so many challenges. So many challenges. It started off as a health crisis. Now it has become a fully blown financial crisis. Right. So it's a real challenge. Now, if you look at not only Sri Lanka, but all over the world, COVID has posed serious problems, some serious challenges. Right. So especially for a country like Sri Lanka, we are facing so many problems, but hopefully there seems to be light at the end of the tunnel because we have so many investments coming in, expected to coming in at least. So there is lots of hope, right? That in spite of these challenges, well, the good thing about the challenge is it brings out the best in you, isn't it? Now, look at Japan, for example. Right? After World War II, after Hiroshima and Nagasaki, things just took off in Japan. Yeah, that is because they had the determination, they were willing to work hard, and as a nation, they progressed. Okay, so adversity brought out the best in Japan. That is exactly what we must make sure happens to Sri Lanka also. With all these challenges, maybe we might have challenges locally, maybe overseas, external as well as internal. But the real success comes with overcoming these challenges and ensuring that the economy progresses. Right? So it's sustainable growth and everyone prospers. So that is why all of you in this class, or if you are watching a recorded version of the class, you have to make sure that you gain a lot of knowledge and capitalize on this knowledge, right? So just make sure that you learn something, not just to pass an exam. Well, that is also very important. It's important that you pass your exams so that you progress in your career. Now, other than progressing in your career, you have to also make sure that you do something, contribute something to the country, because this is the right time, and this is the exact the time that the country wants your contributions the most, right? Because each and every one of us are now supposed to carry our weight, contributes positively towards the country, the economy. Yeah. So just make sure you all understand this subject. The concepts of this subject might be a little new, right? But very easy to understand. It's not rocket science. Right? Trust me, I'm not going to teach you rocket science. I will not teach you brain surgery. In terms of complexity in mathematics, by the way, this is mathematics intensive. Right? So there are lots of numerical things that you might have to do. But believe me, in terms of mathematical intensity, the worst we will get is up to grade 5 mathematics. Like grade 5 mathematics. You don't need to even know grade 6. So if you had dropped out of school from grade 6, you will still understand the mathematical concepts, right? Simply addition, multiplication, division, right, and deduction. If you know those, then you're through. Very, very simple. And the other thing that I want to mention is that there are some technical terms in this, right? For example, if I tell you about a compound called dihydrogen monoxide, how many of you have heard of it? Anyone who has done chemistry? No one? How many of you have heard of this compound? Yes, very good. Exactly. Very good, Kalin. Right. Why? Dihydrogen monoxide. Sounds Greek, no? But if I give an introduction to it now, it is the compound which causes, if you take a cancer cell, right? About 70 to 80% of a cancer cell comprises of dihydrogen monoxide. Then it accelerates the corrosion process of metals. Right? It reduces the efficiency of vehicle braking systems. Right? So is it a disaster? Not really. Why? Because dihydrogen monoxide, in other words, is H2O, which all of us know as water. Yeah. So if I just said dihydrogen monoxide, about 90% of you would have been lost, isn't it? But what it really means is water. Okay. So the concepts or the terms that you come across might sound new, but there is actually nothing new. Yeah. So that is the nature of the subject. You might learn complicated terms, but the baseline case is very, very simple. What it refers to is very simple. Yeah. Well, before we get cracking, I can take a few questions from you. I'll give you 2 minutes to ask any questions that you may have. No questions? All right. So if that is the case, then we will move on. Well, unfortunately, I cannot meet each and every one of you, and if you had met physically, then I could have spoken to you, each and every one of you, and I would have known your backgrounds, right? Whether you are from a finance background or a HR background, marketing background, IT background. It's good to know, because now I just see a list of names. I don't see a face to the name, and I don't know what your strengths and your weaknesses are. Yeah. So that is the drawback of using these systems, technology. Right? Very unfortunate, but we have to make the most of it. Yeah. So it's good that you all are engaged in some sort of of studies. It's good that you're furthering your studies. Now, this is exactly what you must do, right? When there's a crisis, you all should take the bull by its horns and become better, right? Become better. Why? Because it's very important that you upskill yourself, right? Upskill. you have to enhance your skill levels, right? So this is a fantastic time to do it. So most of you are working from home, meaning you save a lot of traveling time, probably the time that you take to put makeup, get dressed, all that is saved. And you might save some money on, might be saving a lot of money also, right? So it's actually good. You can use that money productively. Maybe you can make an investment, or you can, we can't do a lot of traveling, so you can enhance your knowledge by investing it in some sort of a qualification, right, to gain more knowledge. So that way you can upskill yourself. Yeah. Well, the tudes I think will be shared with you all by the institute. You'll have to check with the institute. I'm not sure how you access the tudes. Right. The other important thing is, now I told you that 2020 there was only one exam. For the whole year, entire year, there was only one exam. I may have made a mistake. I think 2020 there was no exams at all. Probably it was conducted 2021, this year. If I'm not mistaken, it was done this year. I could be wrong, but I think it was somewhere around January, February, where they had the exams. And so 2020 was washed out, complete washout. Yeah. Now there might be amongst you all certain candidates who have just 1 or 2 subjects left, right? And you probably may have had the opportunity to complete these subjects during 2019. Okay. So you had an opportunity to complete banking in 2019. You did not. You postponed when you could have finished in 2019. So 2020 there was no exam. Now we're in 2021, and there was one exam. No one knows whether we will be able to have the second one. Okay, because it's COVID has made things so uncertain. You never know what is going to happen next. And they are talking about variants coming up. And fortunately, the vaccine program is progressing. Lots of people are getting vaccinated. So hopefully things will settle down. But you have to plan for the worst, right? So that you will not get caught on the wrong foot and will not be taken by surprise. Right. So it's very important that you don't postpone the inevitable. When you have a chance, you have to take the opportunity, take every opportunity with both hands. And if you had missed doing your exam in 2019, too bad, you got postponed by 2 years. Okay. So just make sure that you complete your banking exams in one go this year. Don't delay it any further. No further delays. My advice to you is, since we are just starting a session, you all should try and attempt all subjects in one go. So if you are taking 6 or 7 subjects, do everything in one go. Don't do 1 or 2 subjects at a time, right? Because you have already wasted enough time. It's now high time you completed everything. Right. Okay, so I think we are good to go. By the way, can you all see these presentations? Is this visible to you?
Yes, sir.
Okay. Right. So today we will start with a very basic fundamental introduction to corporate finance and treasury. So So this is what we are going to cover over the next 4 months, maybe 5 months. Right? We will be looking at managing funds, fund management. What are the aspects you should look at? Now, very simply, one thing you should look at is the return. Then you should also look at the risk. Right? So you should have a bottom line focus with an awareness of the risk that you're undertaking. Now, for example, if you're getting married, right, you just don't jump and marry the first person you see. You should look at the risk, the return, as well as the risk of the person you're getting married to, isn't it? So you just don't jump into conclusions. Okay, so fund management is also the same thing. It's like getting married. Very simple. Yeah, if you know to get married, then you know to manage funds. Okay. So once again, let me remind you that it's very important that you understand the basic concepts. Remember to understand the basics. Right? And if you understand the basics, guaranteed you will pass the first time. So first time is always the best time, no? Everything is easy when you get it done the first time, isn't it? That's when you can enjoy it the most and when it's easiest. Right? So make sure you get through the first time. We will look at concepts of corporate finance, treasury, how to raise funds, manage liquidity, and your investments. Right? We will look at planning, forecasting, some operational aspects, how to offer good service to your clients. Well, that's nothing new. So, and the final point is it has a little bit of number crunching. Yeah. But not a lot. It's not a lot. And the concepts are very simple. Plus, minus, multiply and divide. You know that? You'll be through. And these are the concepts that we will be covering. Right? Fundraising instruments and cost, ALM, asset and liability management, treasury and portfolio management, financial analysis, planning, and forecasting. Yeah. So this covers some of the instruments that we will be looking at. Most of these are already familiar to you. There is no one who does not know equity. Convertibles might be something little new. Then warrants, debt instruments, right? Securitization, asset-backed securities, things like leverage buyouts. And ALM, we will be covering liquidity risk, maturity gap analysis. Okay, this is asset and liability management. It's basically about managing your assets and liabilities. Now, for example, if you want to put up a house or you want to buy a vehicle, maybe you might apply for a loan. Right? So on one hand, you will have an asset, and on the other hand, you will have the liability, which is funding the has funded your asset, right? So how do you decide on things like the cost, the tenor, and the risk profiles of your liabilities? Then we will look at liquid assets, liquidity ratios. We will look at certain ratios, ALM, and ALCO concepts. So treasury and portfolio management will entail, we will look at hedge funds, pension funds, provident funds, right? And a little bit of asset accounting, yeah. IFRS 9. Risk management and measurement, fund management, returns, benchmarking. Then the risk return trade-off, budgeting. Remember, we still have not started the syllabus. This is just a very, very basic introduction. Okay, you don't have to study any of these. Not any of these slides. Don't study up now. I will tell you if there's anything that you need to study, but don't study these. Not that I will tell you every slide. Okay, I will tell you when you have to start studying things that you need to know. So the factors that affect markets. What are the factors that affect markets? Now, these days, very simple. Right? There is only one factor that affects the market, COVID-19. It has become the most critical factor in the market. Everything is decided these days by COVID-19, isn't it? Because when there is a lockdown, or in Sri Lanka, we had to curtail our imports so that we safeguard our reserves. So things like this were all decided by COVID-19. Yeah. So that's like a social factor, isn't it? It was a fully blown health crisis, got converted into a financial crisis, and now we are feeling the impact of the financial crisis hitting us, isn't it? Because the entire world experiences, not only Sri Lanka. We saw a slowdown in most of the economies. Central banks around the world had to cut interest rates because they had to facilitate economic growth. Countries had to get out of this situation. And the vaccination drive was a very key to how fast countries got out of this. We have seen that most of the developed countries have gained a lot of traction in vaccinating the citizens, and the developing countries are also now gradually falling in line, right? So it's a matter of time before the entire world opens up once again. But until that happens, COVID-19 is going to be a very major force. Now, there are certain industries which actually benefited because of COVID-19, right? Industries like which manufacture personal protective equipment, because the demand went up. Then certain industries where, now with import restrictions in our country, like local industries started doing well, because most of the construction were done using local materials. Nothing was imported, or very little was imported. So the local companies started doing well. If you look at equity markets, the stock market, you will understand what I mean. Right? Yeah, so COVID-19 has posed serious challenges. That has in fact become the most important factor for this year. And then we can look at macro environmental factors, the macro bigger picture. Macro meaning the political, legal, economic, social, and technological factors. Political stability. You take, for example, a country like maybe Uganda, yeah, or Afghanistan. Now, given a choice, will you prefer to invest in a country like the US or in a country like Afghanistan? Obviously, in a country like US. Why? Because there is political stability. There is peace in the country, isn't it? The legal and regulatory factors. That's a very important concern, because legal factors and regulatory factors are very crucial to attract investments now. With the port city coming up, we have at least heard that there will be separate legislations being brought in. Yeah. So the law might be a little different from what I hear. And that's to facilitate investments into the country, so that all of us will benefit when foreign investments come in. Yeah. Then economic factors, things like the exchange rate, the GDP growth. Sri Lanka recorded negative GDP growth, which is not good. Then the exchange rate also is under pressure, and as a result, imports are being restricted. Interest rates controlled or decided by the central bank, the benchmark rates, SDF and SLF rates. Then things like unemployment. Right? Unemployment, very, very crucial figure, because it leads to other factors also. If unemployment is high, then it can lead to social risks, right? Social uprising. Also, if unemployment is rampant, then people will have less disposable income. Because not everyone is employed, there is unemployment. Now, if there is unemployment, that person's first objective will be to safeguard his basic needs, or to find his basic needs, isn't it? Food and shelter. Remember Maslow's hierarchy of needs and basic needs. If you are in a tight corner, then the first thing that comes to your mind is your basic needs, and then only you go down to finally the self-actualization need, Maslow's hierarchy of needs. If unemployment is high, then people will not spend freely. They will be focusing on how to acquire the basic, satisfy the basic needs. Because without the basics, they cannot progress. Okay, so unemployment is a very, very important factor. And then when employment or unemployment is low, or the employment rates are high, then people will start looking for more things on top of something beyond the basic needs. And so, because if you have your food, shelter, and clothing, and beyond that, you will look at things like luxuries, like maybe you might look at a BMW or a Merc, and maybe a Mont Blanc, right? Why? Because once the basic needs are satisfied, you have spare money to utilize on your other needs. Okay, so then when more and more people start demanding other needs, right? Let's say everyone is demanding Mercs, right? Everyone is employed. The country has satisfied 100% employment, so everyone has their basic needs sorted out. The next thing is to go for luxury. So people will start demanding for Mercs. Now, when that happens, the economy starts really moving. Because, see, it will start moving because now, when the demand for Mercs go up, everyone wants Mercs, and the demand for Mercs go up, more and more Mercs will have to be produced. So when more and more Mercs are produced, it will require more and more people to be employed for that purpose. Then more and more people will be getting jobs, they will have more disposable income, and the quality of life will improve, right, of the overall society. Yeah. Then you look at things like inflation and commodity prices. If I may ask you a question, right, what do you think is the best thing to do? Is it good to spend, or is it good to save? What are your thoughts? What should you be doing? You should be spending more, or should you be saving more? Okay, Khaled, why do you say spending is good? How can you justify? Well, actually, yes, I also tend to agree, because spending will keep the economy ticking, right? Because now let's say there are about 30 of you in this class, right? So if all 30 of you don't do any spending, right? You just buy your food, basic needs, and you don't spend anything else on top of that, right? You're not going to spend. You decide not to spend, rather. So if that happens, and you are happy with your basic needs, if that is the case, you might not want anything beyond that. You might not want a car, because you have already satisfied your basic needs. You might not want a car. If the 30 of you represent the entire economy and no one wants a car production will stop. So when car production stop, people who are engaged or employed in that industry will miss out. They will lose their jobs. Okay. Because no one wants cars. There is no point manufacturing cars. Everything that was spent to manufacture cars will be abandoned, discarded. Right? Because no one wants cars. So people who are employed in the vehicle manufacturing sector will lose jobs, meaning they will have less disposable income. Yeah. So when they have less disposable income, then they will start cutting down on unnecessary expenses, and they will focus only on the basic needs. They might want only food, water, and shelter, nothing beyond. Right? Maybe they will not even look at investing in education. Right? So if this continues, then the quality of life will drop. Quality of life is down. That happens because everyone wants only the basic needs. No one wants anything else. But if everyone is spending, you earn, let's say, $100,000 a month. For your basic needs, you need 25,000, and the balance 75,000 you are willing to spend. But if that happens, you might be spending on maybe luxury clothes, watches, vehicles, right? Things like that. So if that happens, the people engaged in this industry, in these industries, rather, will start earning more, because their disposable incomes will increase, isn't it? Disposable incomes go up, and if the disposable income can well and truly surpass their basic needs, can source their basic needs, then it will be a step beyond that. They will look at the secondary needs. As people in that industry will start earning money, their disposable incomes will also go up, and they also will start spending. Right? So this will filter down the economy. Everyone will prosper. But if all of us go and put our money in banks, we are not investing in everything. And if all of us represent a cross-section of the economy, we are happy to go and invest in banks, then nothing at all will happen. Why? Because every cent you earn will be invested in a bank, and when the bank takes the money, the other thing they have to do is they have to lend it out. But if no one is doing anything, then no one will come and borrow from banks also. So banks have nothing to do but take deposits. If that happens and there is no way of deploying the deposits, then banks will also lose, isn't it? So it's a knock-on effect. What one person does has an impact on the entire economy, the entire world. Classic example is COVID-19. It started off in one area in China, then started spreading like wildfire. That's because everyone in the world is connected. right? Everyone is connected. From the Chinese to the Red Indians, the whole world is connected. So it's very important that we understand these concepts. Okay. The commodity prices of things like, yeah, you have questions, someone? Anyone has questions? Okay, commodity prices of commodities such as crude oil, gold, silver, and all that, right? The commodity prices during 2020, the height of COVID-19, took an interesting shift. Why? Because crude oil, for the first time in its history, had gone to negative prices, negative crude oil. Yeah, because now, if you want to buy crude oil, you have to pay for it now. It's about $60 a barrel now, right? If you want to buy one barrel of crude oil, you have to pay $60 and buy. But during the height of COVID, everyone stopped traveling, work from home. No one actually wanted crude oil, right? Now, these crude oil manufacturing companies cannot stop production overnight because it's difficult, one thing, and if they want to restart, it's going to be very, very difficult. Right? For that reason, they had to continue their crude oil supplies, but there were no takers. Now, what happened was after that, they had to store it in their storages. So storage capacity also ran out, and eventually they ended up selling crude oil stocks, but at the same time paying a rebate to the customers who bought crude oil. Why? Because no one wants crude oil, so the demand goes down, storage costs kept going up nevertheless. Right? So when storage cost went up, it was actually not profitable to. It was loss. The crude oil company started making losses by storing crude oil. Right? So it was cheaper to pay the customer. Say if the loss of storage, due to storage, the loss is $40 or $50, right? $50, and if you can sell crude oil and ask your customer to keep it, right? Then it might cost you only $35, right? Because with the crude oil, you will also be giving the customer a certain amount of cash. So the guy will take crude oil as well as cash. Yeah. Which means crude oil prices turn negative. So if you buy crude oil, if you had bought crude oil at that time, you would have been paid. Then monetary and fiscal policies. Okay, so monetary policy is governed by the central bank. The central bank decides on the course of interest rates in a country, any central bank. Stock market returns. What is the return that is generating for the equity market? Geopolitical factors, right? So if you are residing in Sri Lanka, you need to know what is happening overseas also. Yeah, because if you had known that there was a virus spreading in China and the country was going into lockdown, then perhaps you could have planned for it better. Yeah, that's geopolitical factors. You should be aware of what is going on around you. Geographical factors as well as political factors. Then market liquidity. If you look at the stock market, not every share is liquid. Not every share. There are shares, certain shares which are not liquid. So those should be dealt with market liquidity. Right. So the next one is on corporate finance. Corporate finance deals with sourcing of funds, capital structure, increasing shareholder value, tools and analysis to allocate funds, financial resources, tax planning, investment analysis, working capital management. Right. So the corporate finance division of any organization will look into these matters. What is the funding source? What are the funding sources? What is the capital structure? Yeah. Sources of funding. Are you going to fund through equity or loan? Then the capital structure. How is the capital structured? Is it equity focused or is it debt focused? How do you increase shareholder value or shareholder net worth? And the tools and analysis to allocate financial resources, plan taxes, investment analysis. Okay, because tax planning also is a very crucial component. Yeah, because you have to make sure that one thing is you pay the proper amount of taxes, not more, not less. Working capital management. Okay, so working capital is the difference between current assets and current liabilities. How efficient are you in managing working capital? Corporate finance is associated with investment banking. Yeah, investment banking is another concept. Corporate finance is very closely associated with investment banking. Yeah, under investment banking, you do things like debt structuring, then equity structuring. Things like IPOs are done by investment banks. An investment bank evaluates a company's financial needs and raises the appropriate type of capital that best fits needs such as creating, developing, growing, or acquiring business. Financial management overlaps with financial accounting. Financial accounting is the reporting of historical financial information. Right? So remember, accounting is about reporting the history. You're doing a post-mortem basically. While financial management is forward-looking and concerns allocation of capital to increase shareholder value. Okay, any questions up to now? Any questions, guys? Yeah. Right. No questions means you either understood everything or you have understood nothing. Okay. Right. So this is going to be the focus, a treasury division. Now what does the treasury division do? That is what we are going to look at. And what are the controls within treasury? Now the treasury is the heart of a bank. It can make or break a bank. Right? Treasury can make or break a bank. Meaning it can either make a lot of profits or it can make a lot of losses and lead to bankruptcy. So this is about breaking a bank. Now this guy is called Nick Leeson. Nick Leeson. Very interesting story. Nick Leeson story. Now, this is one thing which you all should study. Nick Leeson story, you need to memorize. You need to know it by heart. What happened in the case of Nick Leeson? What went wrong? What could have been done right? Okay. So Nick Leeson, very important case study. Okay. Now this is something which all treasurers should know. The case of Nick Leeson. Yeah, and it can get tested at your exam. So it's important that you understand the concept. It's important, also important, equally important that you know the story. You should know what went wrong, what happened in the case of Nick Leeson. Right, so Nick Leeson. Before we get started, I want you all to watch a movie, right? A movie called The Rogue Trader. Right? Rogue Trader. Now, that is the movie of Nick Leeson. So it's very important that you go home, where you're at home already. Very important that you watch it. You can actually watch it on YouTube. Right? Search The Rogue Trader and you can watch it. Yeah. Let me see whether you can watch a trailer of this. Hold on, guys. Let me see whether you can watch a trailer of Nick Leeson's story, right? Because this is something you all should know. Okay, can you all see this?
I know you're keen to get out of the back office and onto the trading floor. We need someone to go out. I know you're keen to get out of the back office and onto the trading floor. We need someone to go out there and sort things out. I thought that someone might be Nick Leeson.
What I love about Asia, anyone can make it. It doesn't matter which stupid school you went to. I just made 2,000 quid. You number one London.
One of our traders in Singapore got drunk the other night and pulled a moon. What did you say? He exposed his bottle.
We couldn't go on running bearings like a gentleman's club. We had to look beyond our traditional recruiting grounds to seek out a hungrier breed.
That's very good, Nick.
Their bearings have almost cornered the market over here, thanks to you.
You've got to start. The man is single-handedly generating a fifth of the group's worldwide operating profits. We are going to make so much money.
Are you enjoying yourself, Nick?
Yes, it's all right.
true what they say about your gonads, isn't it, eh?
He doesn't do things by the book, Ron.
He can't run a modern financial centre with a bunch of hoorah hippies. We need another £2 million profit to secure our bonuses.
Ron, what planet do you live on, mate? Think about Nick. And perhaps come up with ideas to follow his footsteps.
Just worked out the balance in the AIDS account. The losses are over $10 million.
Boys, everything will be all right as we balance the books by the end of the month.
Yeah.
That's all the market is. One giant casino.
These losses are getting out of control. What's bothering me is where you've got all the money to actually pay us, okay, in the first place.
I don't know authorised position.
They want to check on these numbers, iron out these funding problems once and for all.
I, Nicholas Leeson, have lost 50 million quid in one day!
Well, I hope you all saw the screen that I just played, the small video clip that I just played. Did you all see it? Okay, all right. Well, my apologies for some of the scenes which may not be suitable for young audiences, right? When I say young, it's below 18, I think. Yeah, but overall, well, you guys watch worse things, so it's not no big deal, right? But the thing is, now this is the real story. This is where it all began, and this is the most crucial thing about a treasury. Is Nick Leeson, my friends, was a fantastic trader. Fantastic. He was not a rogue. So what went wrong with Nick Leeson? What went wrong? Where did things go wrong? Now, what happened was Nick Leeson was so good that he was initially working, if I'm not mistaken, at Citibank London, and then he got recruited by Barings Bank, right? Now, Barings Bank, that's something that you need to remember. Nick Leeson, you need to remember his name. He worked for Barings Bank. Barings Bank was a 225-year-old bank, the oldest investment bank, the oldest bank, one of the oldest bank in the UK. And within a matter of about 3-4 days, Nick Leeson managed to completely ruin it. It had to file for bankruptcy. How did he do it? That's because he was a good trader and a fantastic trader. So he did well, and he was sent to their overseas office in Singapore. Right, so now, Barings Bank, they had their own faults, so they wanted to cut down on costs. They went on a cost-saving spree. Yeah. So to cut cost, they asked Nick Leeson to manage the front office, the middle office, and back office of Barings Bank. Now, usually this should be done by 3 different people, not the same person, right? But Barings Bank didn't want that. They want to cut down on costs, so they asked Nick Leeson to do a one-man show. So that is where all the problems began, right? Because Nick Leeson was his own control, and things slipped here and there. Now I'm not sure whether you all noticed that one lady went up to Nick Leeson and said that the 8th account is showing lots of losses. So that's where it all started, because a bogus account called 88888 had been created in the system of Barings Bank. Now that is a huge lapse, isn't it? Because everyone, well, just imagine if your systems, right, whatever the system you are using in the bank, if anyone is able to go and create usernames or account numbers, then there's a serious flaw, because it has to be done with certain controls. Not everyone should be allowed to create accounts, isn't it? But Barings Bank had never had that control, and people started creating accounts. So one such account was the 88888 account. Now, when that was created, what Nick Leeson did was, he was a trader. Whenever he made losses, all the losses got parked in this 88888 account. But the profits he began to show. Yeah. Now this 8888 account was supposed to be a custom account. So whenever the customer made a loss, it means the bank makes a profit. So this continued. It continued. It happened for some time. Not even auditors found it. Because one thing is the auditors did not have the competency to detect this. Yeah. Looks like a simple thing, but it never happened. Now, the losses piled up. They continue to pile up. Yeah. And it was unbearable at one point. Barings Bank could not take losses any further. Yeah, so because Nick Gleason was betting on the financial market in Japan. The Kobe earthquake struck and the market just crashed. Yeah. So Nick Gleason's trading positions all suffered heavy losses. He couldn't take the loss. So all he could do was just wrote a note saying, "I'm sorry," and he left the bank, ran away. Got caught, was sent to prison. Now, during his prison days, he started writing a book, right? He did not waste time. It's like lockdown. Going to prison is like lockdown, isn't it? And most of us don't have experience, but let's assume that it is like lockdown. You are not supposed to get out of the prison. You're supposed to stay indoors. Nothing else you could do. It's like lockdown. So that's where Nick Gleason made use of the lockdown period. So this is why you guys also should make use of this lockdown. Well, it's not lockdown actually, but movement is restricted. So it's as good as a lockdown, isn't it? For your safety, you have to stay at home. Now, while you stay at home, you can do what Nick Gleason did. What did he do? He started writing a book. It was called The Rogue Trader. So this book later got converted to a film. The preview that I showed was from Rogue Trader, right? Okay, so he wrote a book and he was sentenced to 6 years in prison, but in 4 years he managed to get a bailout. He got bailed out, right? Because he was diagnosed with cancer, but he's still around. Now, Nick Gleason was in prison. He wrote a book and the book became a bestseller. So he started printing money. Printing money means he started minting money, made lots of money. And he was able to buy a football club. Now this is genuinely earned money. And with that, he was able to buy a football club. Right? Nowadays, he takes lectures also on risk management. Okay, so Nick Gleason is a sought after person for risk management. Well, I was just looking for a video clip on Nick Gleason, and his story is explained very beautifully. Couldn't find it, but just make sure you watch this movie, yeah? Rogue Trader. Right, sorry, I can't find it. So let's move on. Okay, so Nick Leeson was a former derivatives broker whose fraudulent, unauthorized, speculative trades caused the collapse of Barings Bank in 1995. Now, this is something you should remember because his trades are fraudulent, unauthorized, and speculative. Right. So Barings Bank was the UK's oldest investment bank, for which he was sent to prison. Right. This guy was sent to prison, 6 years in prison sentence, but it was cut down to 4. He lost about $1.3 billion equivalent of sterling due to speculative investing, primarily in futures contracts at the bank Singapore office. Okay, now the first paragraph contains some of the most important parts of this puzzle. Fraudulent, unauthorized, and speculative. Certainly not something you should do. ING, a Dutch bank, purchased Barings Bank in 1995 for the nominal sum of £1 and assumed all of Barings' liabilities, forming the subsidiary ING Barings. Right, so ING. Now Barings was liquidated. It was sold for £1 for Barings to Barings Bank, to ING Bank. In 2001, ING sold US-based operations to ABN AMRO for $275 million, and they folded the rest of ING Barings into its European banking division. Okay, so they made a killing. They bought Barings for £1 and sold it for $275 million. About 5 years later, Leeson made unauthorized speculative trades that at first made large profits. So remember, it's unauthorized and speculative. He used one of Barings' error accounts to hide his losses. Right? His losses were hidden in one of Barings' error accounts. Management at Barings Bank allowed Leeson to remain chief trader while also being responsible for settling his trades. Jobs usually done by 2 different people. So he was asked to run the bank's front, middle, and back office. That is where they make the biggest blunder. This made it much simpler for him to hide his losses from his superiors. When Leeson placed a short straddle, we will study what this short straddle is. It's where you basically sell a call option and a put option. So let's get to this when we start doing derivatives in Singapore and Tokyo stock exchanges, essentially betting that the Japanese stock market would not move significantly overnight. However, the Kobe earthquake hit early in the morning on 17 January, sending Asian markets and Leeson's trading positions into a tailspin. After a failed bailout attempt, Barings was declared insolvent. Jerome Kerwell of Societe Generale. Now, this is another name which you should remember, right? The first one was Nick Leeson from Barings. The second one, Jerome Kerwell from Societe Generale. Then we will have Koiko Adeboli from UBS and also London Ware or Bruno Exil from JP Morgan. Right? So those 4 names and the banks that they work for should be remembered. Now, the most important thing for you all to know from this chapter is the 4 names, where they worked, and what went wrong. In most cases, you will notice that it was unauthorized speculative trading. Unauthorized speculative trading beyond their mandate. Right? So these traders have exceeded their mandate. Jerome Kerwell in Societe Generale is a French trader who was convicted in 2008. In the 2008 Societe Generale trading loss for breach of trust, forgery, and unauthorized use of the bank's computers, resulting in losses valued at 4.9 billion euros. Okay, so comparatively, Barings Bank made less losses, but they were smaller. Societe Generale characterizes Kerwell as a rogue trader and claims Kerwell worked these trades alone and without authorization. Again, another key word, without authorization. Even Nick Leeson, without authorization. The bank states that Kerwell was assigned to arbitrage discrepancies between equity derivatives and cash equity prices and began creating the fixtures trades in late 2006 and early 2007, but these transactions were relatively small. The fake trading increased in frequency and in size. Jerome had been trading profitably in anticipation of falling market prices. However, bank accused him of exceeding his authority and to engage in unauthorized trades totaling as much as $49.9 billion, a figure far higher than the bank's total market cap. Kerwell tried to conceal the activity by creating losing trades and hidden profits intentionally so as to offset his early gains. Analysts suggest that unauthorized trading of this scale may have gone unnoticed initially due to the high volume in low-risk trades normally conducted by his department. The bank said that whenever the fake trades were questioned, Kerwell would describe it as a mistake, cancel the trade, after which he would replace that trade with another transaction using a different instrument to avoid detection. And so he was very smart. He didn't show profits only, he showed losses also. The bank claimed Kerwell had taken massive fraudulent directional positions in 2007 and 8, far beyond his limited authority, and that the trades involved European stock index futures. Kerwell was found guilty and sentenced to prison and banned from working in financial services. So 6.7 billion was lost. Now, that is another common feature in all of these four cases. Yeah, the first one was unauthorized speculative trades beyond their mandate. Right? They were asked to arbitrage. Do arbitrage meaning risk-free profits, earning risk-free profits. So instead of arbitrage, they exceeded their authorities and entered into speculative trading, which is risky. The second common thing is, as a result, all of these banks lost heavily. They lost heavily, and the traders were implicated. They were sentenced to prison. They were barred from trading any further or joining competitors, being in the industry. We got Adeboli. Adeboli worked in UBS's equity trading division as a trader analyst in London. He was arrested under suspicion of fraud in connection with the loss of then estimated $2 billion due to unauthorized trading at UBS's investment bank. Adeboli was found guilty of fraud and imprisoned. Right? So Adeboli from UBS. London Whale in JP Morgan Chase, Manhattan. Okay, so his full name was London Whale. Large trading losses occurred at JP Morgan's chief investment office based on transactions booked through its London branch. The unit was run by Chief Investment Officer Ina Drew, who has since stepped down. A series of derivative transactions involving credit default swaps were entered reportedly as part of the bank's hedging strategy. Trader Bruno Excel, named the London Whale, accumulated outsized CTS positions in the market. An estimated trading loss of $2 billion was announced, with the actual loss expected to be substantially higher. Okay, so those four traders, the common features, the implications. Common features meaning exceeded authority, unauthorized transactions, speculative, those you should know. Then the implications are that banks made losses and also traders were banned or imprisoned, things like that. These things you should know. Right, so the treasury division of a bank, or most treasury divisions of any organization, are divided into four components: the front office, middle office, and back office. The front office is where transactions originate. Okay, you need to remember this, by the way. Front office is where transactions originate. They report usually to the MD or the CEO. Middle office is where the risk of front office is monitored, and they report to the head of risk. Back office deals of front office are executed and accounted, and they report to the CFO usually. The front office manages the bank's exchange and interest rates. It's the front office that manages the bank's exchange rate and interest rates, because only the front office engages in transactions. The middle office and back office are prohibited from engaging in transactions. Then the front office stays abreast of market dynamics. They should know what is going on in the market. So when COVID-19 is coming up in China, they should have, if they had predicted that it will strike your local market also, then they have been abreast of markets. They have been following markets. So the front office will take risk, but they will not gamble. And these are the desks, right? Or the business units within a front office: the money market, interbank, customer, fixed income, ALM, derivatives, and the equity desk. So it's not that all banks will have all of these desks, but they will have most of them. Then the money market desk. Okay. They maintain the statutory reserve requirement of the bank at central bank, SRR, which is 2%. So every 100 rupees you get, you need to, of deposits you get, you need to keep 2 rupees in the central bank, which earns 0% interest. Right, so if you keep more than 2%, you will lose out on interest income, but if you keep less, then there will be penalties. SRR, sorry, it's not 6, it is currently 2% of the bank's deposit base from 1st to 15th and 16th to 31st, right? So there are 2 cycles of SRR. First cycle runs from 1st to 15th, second cycle from 16th to the 31st. SRR is impacted by these factors, like the opening balance. Now, if you want to arrive at the closing balance in your statement, you have to start with the opening balance. Then you have to look at what are the inflows, what are the outflows. Then foreign exchange transactions, treasury bills, bond purchases for sales, maturities, interbank instruments like call money and repo, clearing balance, slips, inward and outward RTGS transfers. Right? So RTGS transfers will also have an impact. And the front office will also manage, the money market desk will also manage the foreign exchange behavior. Sorry, not the foreign exchange, but the foreign currency balances. Your nostro account balances, they will also be funded by the money market desk. Repurchase agreements or repos is where an entity can pledge treasury bills and bonds and borrow against them. You all have done repos or reverse repos. So repos is where the bank is short of money and they pledge their securities and borrow against it. Right? Reverse repos is the opposite. If you have surplus plus cash, you can lend it against securities of the borrower. Right? That's called a repo or a repurchase agreement. Reverse repo is the opposite. If you have surplus cash, you can lend it out against government securities. That is called reverse repo. Okay, so remember, repo is borrowing, reverse repo is lending. So if I am the borrower and you are the lender, I will borrow using a repo and you will lend using reverse repo. Interest rates are usually lower than clean borrowing. Yeah, that's because a collateral is attached. So the risk assumed by the lender is significantly less. Right? But before you enter this, you need to make sure that you get the documentation right. Otherwise, it can be a real big mistake. Okay, so documentation will mean things like the master repurchase agreement should be in place. Then you should stick to your limits. Right? Then you should also maintain a haircut, because beyond the haircut you will not lend. Reverse repurchase agreements or reverse repos. That's when an entity with surplus funds can lend against treasury bills or bonds. Such lendings are more secure than clean lendings. Then the interbank desk, they will basically handle the foreign exchange transactions. Right, interbank desk will handle foreign exchange transactions. We will get into the basic terminology later on, but for now, just remember that interbank desk will handle foreign exchange. Right. Customer desk. All customer transactions will get routed either to or through the customer desk. Things like imports, exports, remittances, customer repos, everything should go through the customer desk. Customers might contact treasury either direct or through the branch. Customers can be individuals, retailers, or corporate. And customer satisfaction is very important. You need to build a strong rapport with your customers. This is where the most profit comes from. The fixed income securities, that is where they deal with government securities and maybe debentures, cooperated. Yeah, so we'll get into treasury bills and bonds later on. So fixed income desk. Fixed income mainly deals with treasury bills and bonds. Now, treasury bonds are instruments which are used by the government for borrowings. Okay, so government securities are initially issued at a primary auction. Potential investors will bid through primary dealers who in turn submit the competitive bids electronically to the central bank. The central bank will accept lowest bids. Right? They will start accepting at the lowest possible rate. Bill auctions are usually held on Wednesday, and settled on Friday. Bond auctions are held on 1st and 15th of a month. Government securities subsequently trade on the secondary market. Which is then over-the-counter market. Treasuries do not have default risk unlike corporate debt, since governments have been vested with the powers to print money. And there is a settlement system which is called DVP RVP. Now this is going to be implemented even in the stock market. Then there will also be an ALM desk, or the Asset and Liability Management Desk, in the dealing room. It monitors liquidity risk of the bank, decides on deposit rates, monitors statutory ratios, and monitors maturity mismatches of ALM. Yeah, so we'll get into each of these desks later on. Then there will also be a derivatives desk. Okay, so once again we will be touch basing on derivatives also later. Okay. Okay, sorry about that. Right, so derivatives. Now, this is where the risk management mainly happens using derivatives. We'll get into this later on. Okay, so these are the derivative instruments: forwards, futures, options, and swaps. Market directions, you can either be bullish or bearish. Bullish means if you feel the market is gaining, then you are bullish. But if you are not positive about the market, then you are bearish. All right. Any questions up to now? No questions? Okay. Now the risk management in a treasury, right? Very similar to risk management at a branch. It's things like dual authorization, dual verifications, access controls, right? So things like that. Then need for controlling of dealing. Yeah. Controlling of dealing meaning everybody can't do everything. Now in your branch, if you're handling, if you're sitting in the cash count, you can't all of a sudden next day go and start giving loans out. Yeah. So there is control. Each person has a defined role. He is not supposed to go beyond that. And there are limits, right? Limits can be maybe a dealing room limit or counterparty limit. Dealing room limit is the maximum amount of transactions that can be undertaken by the dealing room. Counterparty limit is the amount of exposure you can have to a particular counterparty. Now, when you give loans, for example, you don't give unlimited amounts to a particular given customer, but on the other hand, you give only up to a certain amount, right? That's because you have a limit on the counterparty. Then dealer-wise limits, right? Now, if at the branch level, if you want to approve a loan up to maybe 1 million rupees or 2 million rupees, the branch manager might be able to do it, or even the teller might be able to do it. But beyond that, if it's 5 million, maybe the regional office. 10 million, perhaps someone at head office. About 50 million, perhaps the MD. Right? Above 100 million, maybe the board has to approve. So things like that, you might have limits. Likewise, in treasury also there are dealer limits. So the senior dealer will get bigger limit, big allocation, whereas junior dealers will have smaller limits, smaller allocations. Portfolio limits, the amount of exposure you can carry in a particular portfolio. Now, for example, if you take the entire bank, ideally a bank should have the maximum exposure that is desirable in pawning. How much of maximum pawning loans are they willing to extend? Then what is the maximum exposure to personal loans, credit cards, housing loans? Likewise, for each and every category, like portfolio, you should have a limit. Otherwise, you will be exposed to one particular segment which may be of high risk, right? Because of these days, people are stuck for money. Maybe everyone might come to you and ask for a credit card, or might come to you and ask for pawning advances. Right? They might pawn their jewelry, take loans, but they are unable to settle. If no other loan is moving, the only product that is moving is pawning. That means there is an issue. Yeah. Stop loss limits. Operational policy and auditing. Right. Stop loss limits means unlike in a branch, right? A branch, you don't tolerate losses usually. If someone is short of cash, beyond a certain level, there may be penalties. Whereas in a treasury, it is understood that the traders will make losses, right? Because markets are beyond your control. No one can control what is going on in the market. If that is the case, you should have a threshold level where the dealer should not exceed. Right? So threshold should not be exceeded by traders. That's called a stop loss limit. Operational policies. Everything should be documented. You should have a process like a manual, which you have already got in a branch even. Those should be documented and implemented as a policy. Auditing should be done very frequently. Frequent audit checks should happen. So why is risk management and controls needed in a treasury? Why do you think risk management is important in treasury? The main reason is transaction volumes are massive. Right? Volumes traded by a treasury is huge. And also the market is volatile. Markets are volatile markets. Right? So if that is the case, then the combination can be pretty deadly. One wrong move and the bank will end up making huge losses. Remember Nick Leeson? Huge volumes, and if the market is volatile, they can end up making losses. The bank can completely get wiped out if this is not controlled properly. Okay, so it's very important that treasury has controls. Any questions you may have so far? No questions? Well, no questions means two things. Either you have understood everything or you have understood nothing. Okay, so if no further questions. Now, these are the kind of limits that you can have in a treasury. Right? You can have, these are the basic limits. Perhaps you can have even more limits. So that your risk is well and truly controlled. Dealer limits can be risk control limits, profitability limits. You can have asset limits, like what we discussed earlier. Transaction size limits, turnover limits, value at risk limits. Value at risk is a concept which we will study later. It means the maximum amount of loss you can suffer for a given day. Profitability limits, stop loss, take profit limits. Right now, interestingly, that is an interesting concept. Now, stop loss meaning you put a cap on the maximum amount of loss you will make. But take profit limit is quite the opposite. It's where you put a limit where the trader has to take profit when it comes to that level. It's called a take profit limit. Right? It's because if he wants, if he's, let's say he bought, just for simplicity, let's say, assume that he bought dollars at 100 rupees. And if the dollar went up to 110, he will make a gain. The take profit limit is something that limits his gain. The take profit limit might be, let's say 115. So if the dollar rate goes to 115, he has to take the profit. Yeah, if he is going to carry it, if he wants to carry it any further, he has to get special approval from the higher ups. Otherwise, he is supposed to take his profit or book his profit at 115. Now that is imposed. Such a limit is usually imposed because otherwise traders might indefinitely, they might feel greedy, right? When you start making money, you feel greedy and you will want to carry your profits indefinitely, which is not practical. Because you are exposed to fluctuations in the economic cycle, and if you are capable of realizing a profit at the top, you don't do it, and if the market comes down, then you will start losing money. That can happen. So you should have a take profit limit also. Any questions so far? Manoja, what is value at risk? Why is value at risk? It stands for value at risk. Value at risk we will be studying in detail later, right? It's the maximum possible loss you will incur for a given period of time at a given probability level. Okay, so I will stop at that for now on value at risk. I'm not going to elaborate any further on value at risk. We will take it up when we come to value at risk. Okay, Manoja, understood? It's basically about the amount of loss you are going to incur at a given probability and a given period of time, right? So for now, that understanding on value at risk would do. Yeah, we will get to it later. Right, so other kinds of limits are position limits, dealing room limits, dealer limits, intraday limits, and overnight limits. Portfolio limits, right? Based on the asset type or the volume. Asset type can be based on the asset class or the tenor. The portfolio limits can have mismatches due to duration, convexity, exposure levels, right? Mismatches. A mismatch is where you don't match maybe the cost or the tenor of a asset and a liability. Okay, now for example, when you accept deposits for a bank, you take deposits maybe maximum 1 year, right? 1 year deposit. Whereas when you give loans, say housing loans could be a 15-year housing loan or a 10-year housing loan. So you have taken a 1 year deposit and given a 15-year housing loan. That is a mismatch. You are not matching the tenors. Duration is the interest rate sensitivity. We will get back to duration later. Convexity also we will cover with duration. So these are measures of interest rate sensitivity, right? You can, the point is you can have limits on maybe a mismatch. The maximum mismatch you can run maybe 25% of the maturing assets is their limit. Like duration, you can say a duration mismatch of 5 years is your maximum tolerance level. Then convexity, you can have limits, exposure limits, value at risk limits, we will discuss. Counterparty limits, right? So counterparties. Now, when you're giving loans to customers, you don't take one customer and give him the entire amount of money that you have, right? That's because there is possibility of default. Controls the credit risk. Okay, counterparty limits control the credit risk. Then the settlement risk. Yeah. So settlement risk means when you're doing foreign exchange in particular, right? Foreign exchange. Now, the whole world operates at different times now. So China starts maybe our time early morning, right? Singapore a little before us, about 1.5 to 2 hours before us. Then Dubai just after us, about 1.5 to 2 hours after us. UK starts about 5-6 hours after us, and US starts about 11-12 hours after us, right? So the time zones are different. They operate in different time zones. When the time zone is different, right? When you have different time zones, what happens is, let's say, for example, you are buying dollars. You're buying dollars. Okay, so let's say two local banks, two big local banks. You can put whatever names you want to these two local banks. If one bank is buying dollars from the other bank, what happens is the buyer will get his dollars in his nostro account, whereas he has to pay it in rupees to the seller. Right? So let's say you bought $1 million at exchange rate of 200 rupees. So the transaction effectively is the buyer should get $1 million into his nostro account from the seller. Yeah, and also the buyer of dollars should give $1 million into the seller's central bank account, RTGS account, right? So now US and Sri Lanka operates in two different time zones because US is behind us. US is behind us. So during Sri Lankan time zone, the buyer will give the rupees to the seller. Okay, rupees is going, but he still hasn't got physically. He does not have possession of the dollars. The dollars will come later. Isn't it? Dollars will come later on. It will come only when New York opens. So the buyer will have to wait until New York opens to get the dollars. In between, lots of things can happen. One thing is the seller can default. The seller can go bankrupt. Or the nostro account can go bankrupt. Maybe the seller's nostro account can go bankrupt, or the buyer's nostro account can go bankrupt. But that happens subsequently. In between, the buyer has already given his dollars, his rupees. Yeah. Now, in between, this kind of hiccup can happen. If it does happen, then the buyer will lose. The buyer of dollars will lose. So there is a settlement risk. It's called settlement risk. Until it gets settled, there is a risk. It is called settlement risk. It might be a few hours, but nevertheless, it is a risk. Now, there is an actual case study with a bank called Hersted Bank. It went bankrupt just before settlement occurred due to the different time zones. Right? The pre-settlement limits and issue limits. These are the kinds of risks that you can have. Remember, authority is vested with the Treasury to ensure compliance. You have to comply with all rules and regulations. There is no question about it. You cannot violate compliance regulations. Right? Regulations of maybe they're coming from the regulator. Could be things like Foreign Exchange Act, things like that, right? Then within the overall authority delegated, you should comply with rules and regulations, and you should trade within the authority levels given to you. Provide specific sublimits to each dealer department. Yeah, so once the chief dealer gets his limits, then he can assign them or delegate them to his subordinates based on their seniority. Each dealer is responsible and accountable for positions maintained. Okay, so each dealer should take ownership to the positions that he is carrying. Then you should have trading policies. Now, trading is something which depends on market fluctuations. So market fluctuations are beyond trader's control. There is nothing a trader can do about it. With this understanding, you should have a certain policy so that all traders are treated equally, and you are also better able to identify the better traders, the quality traders who's doing a good job. So the trading policy should carry things like daylight, net open position, things like that. Daylight means during working hours, right? From 8 to 5, what is the kind of risk you are supposed to take? Net open position is from the time you close business at 5 o'clock until the bank opens the next day or the market opens the next day. What is the maximum amount of risk you are allowed to carry? Okay, so it can be a daylight limit or net open position limit. All trades must be within dedicated limits. Right? You are not supposed to exceed limits. Must be communicated in writing. You are not supposed to move the goalpost. Yeah, you can't say verbally. You can't inform. Yeah, you can't tell your trader that you need a 1 billion profit for the year. That you can't say. You must put it in his KPIs. 1 billion profit for the year. For A, B should give 500 million profits because he is junior. Things like that should be given in writing. The mismatch positions must be contained within the specific limit, right? So you have to make sure you are within limits. Excesses must be reported promptly and approved. If you exceed your authority, it has to be reported immediately and approved by the top management. Then undertake transactions only with approved counterparties subject to approved limits. Okay, so you should know whom you are dealing with. Only approved counterparties should be dealt with. You can't go beyond that. Each dealer must ensure profitable use, covering of surplus, deficit, overnight cash balances as projected. Right. So traders are supposed to make efficient use of funds. Don't let anything idle. They should not enter into deals where the agreed rate is substantially different from the market. Meaning you should not carry out off-market trades. Because if you do that, then it looks like fraud, isn't it? Because if you can buy dollars at 100 rupees, you should never go and buy dollars at 105. You should go with the market. Dealers must act prudently at all times in the best interest of the bank. Right? You can't be acting in your own interest. You have to act in the best interest of the bank, because bank has a fiduciary responsibility to safeguard deposits of depositors. You can't randomly gamble with that money. Deviation from the above needs specific approval. You're not supposed to deviate. Right? Very simple. Operational policy: the roles of all parties transacting, processing, recording, checking, and monitoring all transactions must be clearly defined and well understood by all parties. List of duties should be completed and clear. Okay, so everything has to be well understood. You should detail out everything, everybody's role at the beginning. Role should be clear. Each dealer is solely responsible and accountable for the positions maintained. Right? You have to own up to your actions. Properly recorded in the dealer's own position record. At the close of business, compare with the settlement records. All the deals must be properly recorded on dealing slips and submitted to. Okay, so you should do a reconciliation basically to ensure that everything has been captured. You can't afford to miss transactions. All the deals must be properly recorded on the dealing slips and submitted to the back office with minimum or no delay. Yeah. So immediately transactions should flow through to the back office so that no delay in settlements. Dispute resolution matters. Ethics. Right? These are unwritten laws. It's very important that traders adhere to ethics. Why are they important? Because without ethics, there is no survival for an industry. Right? All traders are supposed to be ethical. That ensures that there is fair play in the industry. Right? Nobody manipulates markets. The customer gets the best price, and everything is transparent. So you have to be ethical. What are the controls in a treasury? You can have things like access control. Not everyone is allowed into a treasury. Dealing and dual authorization. A dual authorization, meaning if a transaction is entered, it has to be approved by someone else. Immediate and authenticated confirmations. The confirmation should come immediately. You can't get confirmations in 2 weeks. That is not done. Reconciliation. Brokerage and noster account should be able to reconcile. Revalue. This is for accounting. Right? And also accounting. Proper accounting should be done. Settlement procedures. Audit. Policies like treasury policy, ALCO policy should be in place. Limits. Disaster recovery plans and voice recording should be in place. Right? That's where DR sites are important. Voice recording should also be done. Then the middle office. Okay, this is where the risk is monitored. From front office, remember, enters into transactions through those various desks. Then you get those transactions are monitored by the middle office. They monitor risk of transactions done by treasury. Things like limit adherence, counterparty, daily limits, loss limits, settlement limits, etc. needs to be looked into. Then value at risk is usually calculated and compared. Back office, on the other hand, executes transactions. The front office originates, middle office monitors risk, and back office executes transactions. They keep records and also transaction records. Accounting is also done at back office. They maintain accounts, post accounting entries for treasury transactions, cash flow settlements, P&L balance sheet of a treasury division. Right. Okay. Looks like that is it for today. If you have any questions, you can ask. So if you have no questions, then we can wind up for today, and we will meet next week. Okay. All right. So thank you very much. I will see you next week. Stay safe. Thanks, guys.
Thank you, sir.
Thank you.